We're value guys. Our competitors are out buying royalties at nearly any price to be able to create deal flow, to be able to grow their companies. We believe long-term that a value approach will win the day.
They're trying to think of what their investors want. You don't have that. Why do you look at other royalty companies? I think the only thing you've got in common with royalty companies are the word royalty in the name. Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up at the end. It helps us understand which companies we should be spending our time, money and effort on. And do leave your comments below. It also helps us to understand the sorts of questions you'd like us to be asking, how you think we've done, of course, what you think of the company. And you can get a transcript or an article or a podcast of this interview on cruxinvestor.com. And of course, for our early access members on Crux Club, you get to see this video first. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to David Cole, CEO of EMX Royalty Corp. They're listed on the TSXV and also NYSE. Slightly unusual royalty company in that they focus on project royalty generation rather than trying to work their way up the food chain. They see a longer term yield curve return by sticking with that. That's not to say they haven't done royalty acquisitions, and also with $70 million in the bank, they're also making additional acquisitions such as the remediation business. So we talked to David about his business plan in the early days, how that's changed today and what his plans are for the future. So quite a lot of topics discussed on how he goes about doing business, the trust he puts in his team and their ability to identify projects and when the cash flow is coming through. So take a look in the description below at some of those topics. Anything interesting in particular, click on the number, that's a timestamp, and I'll jump you to that part of the video. Otherwise, enjoy what David has to say. David, how are you doing, sir?
Matthew, I'm doing really well. My pleasure to be here.
Well, fantastic. Fantastic. Thank you very much for joining us. We've been wanting to speak to you. You're one of our favorite little royalty companies. And thanks very much for joining us. You were just saying before we came on, you're off for a fishing weekend, which sounds like way too much fun.
Yeah, we have a native Colorado cutthroat trout here that is spawning. It's always fun to go fish while they're spawning.
Fantastic. How many days are away with the boys?
Oh, yeah, two nights. 2 nights. Good stuff. Hey, well, why don't we get stuck into it? Can you give us a 1-minute overview of the company, and then we'll take it from there? Yeah, so we convert prospective geologic ideas into royalties. And we've been doing that for 17 years. And we do that by execution of the royalty generation business model, where we take those geologic ideas, acquire prospective mineral rights, add value by building economic geologic models, selling those on to an industry hungry for new discovery opportunity in exchange for annual payments, work commitments, shares, cash, and always a royalty on the back end. And we've done this prolifically for almost 2 decades now. In addition, we also buy royalties and we make strategic investments. The combination of the three has worked out really well for our shareholders.
Yeah, it has. I mean, obviously, the last year and a half has been fantastic with regards to share price, market cap, around 250. I mean, all going gangbusters. What I'm trying to work out, though, is what type of company are you? You've been at this, 16, 17 years? I guess when you started off, it looked very different from today. So what did you set out to do day one, and how's that changed?
Acquire intelligent people has always been the top priority for me. Put the right people on the bus, good things will happen. That's always been the way we've approached it in a people-first manner. The business units we have around the world are built around the intellect of these dominantly economic geologists, but also other contributors as well.
Okay, so talk to me a little bit more about royalty generation, because most royalty companies, when they reach a certain size, they're aiming to be a mid-tier, they want to grow quickly, they start looking at bigger and bigger deals. I mean, so how has your thinking evolved? Because royalty generation is nice, but it's kind of at the earlier stage. The younger royalty companies start there. So, what's the weighting that you allocate for royalty generation versus royalty acquisition versus some of this? You talk about strategic investment, and I know you've made a couple recently. Just talk about the mix.
Yeah, happy to do that. So royalty generation is our core, and that's what puts the entrepreneurial economic geologists in the field with their ear to the railroad track, identifying the opportunities and giving us a sense for what the market is doing out there. Our customers are major mining companies, and so we have a sense of what they're doing, how they're investing their money, and understanding the market. Whilst they're there, they occasionally identify royalties to buy. They occasionally identify strategic investments, and our strategic investing track record has been nothing short of phenomenal. It's a 40% internal rate of return on invested capital over a 17-year history. But coming back to your specific question, Matthew, about how we view the allocation of capital through those three aspects of our business, and and core to our belief and our DNA, we're value guys. Quite honestly, we're value guys in a momentum world, but we're value guys through and through. We are all about astute allocation of capital. We believe that it is the most astute allocation of capital to grow royalties organically long term. That's the best way to accumulate a royalty portfolio with the least cost. Our competitors are out buying royalties at nearly any price to be able to create deal flow, to be able to grow their companies. And the market is giving them reward for that in the current market space. We believe long term that a value approach will win the day. And we're getting recognition for that in the marketplace today. With more money in the bank, which we have we're in the enjoyable position to have nearly as much money in the bank as we've raised in the history of the company, something which none of my competitors could come close to saying. And that's thanks to liquidation events within our strategic investments that have paid off really handsomely. And due to the fact that we have more arrows in the quiver now, we are enhancing our royalty acquisition strategies and our strategic investing strategies, but always with an astute allocation of capital mindset, a value mindset.
Okay, so talk to me about this, because you talk about having economic geologists or geologists who understand the economics of this and what they need to be looking for. So there must be a kind of profile for the types of targets that you're looking at. So what do they look like?
Yeah, so we a lot of our geological expertise are in geological terrains that have copper and gold. So the focus of the company from the very beginnings have been in copper and gold projects, but we have expanded out into battery metal space and polymetallic space, lead, zinc, silver, copper, cobalt, nickel, PGEs, things like this. But our core has always been leveraging our strategic advantage of our geologic knowledge of copper and gold systems.
Okay, but if I look at your competitor, you refer to them as competitors. They like to be targeted. They like to be precious metal focused, or they like to be South America, North America focused. They're trying to think of what their investors want. You don't have that. You are geographically agnostic. Sounds like you're now commodity agnostic, right? So I'm trying to work out how you position yourself in the market and why people are paying attention, because they are, because your share price says they are.
So Matthew, you touched upon something very important right there. You said that my competitors are focusing on what they think the market wants, and they are. We don't do that. We focus on what we know will accrete value for EMX shareholders long term, and that's acquiring really smart folks, engaging them, and building value within this space through the acquisition of prospective mineral rights and converting that into royalties.
But it comes back to the point. So you think you're going to lead rather than follow, and that's your differentiator. Yep. So why do you look at other royalty companies? I think the only thing you've got in common with royalty companies are the word royalty in the name, isn't it?
Well, royalties are phenomenal financial instruments, and I can't begrudge any company for paying dearly to acquire them. And I shouldn't sound like I'm trying to begrudge my competitors. They just approach it in a different way. But royalties are fantastic because of the embedded optionality. And when we acquire a piece of prospective mineral rights, Matthew, I'll give you an example. We tend to do two types of organic deals. One is we acquire some prospective mineral rights. We sell it off to an incipient public junior company in exchange for shares, maybe some small but escalating cash annual payments. Always a work commitment to get money spent in the ground. That's where the value is created, and a production royalty on the end. Now we have the optionality of being able to accumulate that annual cash flow pre-production, also be able to play that share position that we have in the company to the advantage of EMX. We have a great track record of making money off of our share positions in the history of the company. those shares, which have been paid to us part and parcel to our deal flow. Whilst we're waiting for that optionality that's most important, which is discovery optionality, to happen on our portfolio. And there's multiple examples deep in the portfolio of discovery optionality coming through to fruition. And it's a really fun business.
Yeah, it's certainly interesting. It took me a while to decipher what was going on, I think, because you need to fill the hopper, right? Because your value curve is different from a traditional royalty company, in that you've got a lot of stuff going on at the ground level. You need to kind of really fill that hopper, and you need to be doing a lot of deals, which take a little bit longer to come through. But over the time frame, you think that's what your best. That's your best model. That's the best model for you.
Yeah. So, one good cash flowing royalty that emanates from our organic portfolio will pay for all the money we've ever spent. Yeah, and that one's coming in Bullion. Bullion is already cash flowing as a production royalty to us. It's about to ramp up into full scale commercial production, becoming a multi-million-dollar cash flowing royalty per annum, with a really long mine life. And they continue to find more high-grade lead, zinc, silver. This is in northwestern Turkey, 5,000 ton per day mill. We're very, very, very pleased with how that property is coming along. It's a great one to point to as just one project that has paid for the entire creation of the whole portfolio.
So what I'm trying to work out is, where's the inflection point come? Okay, because you do have this weight of lower value projects sitting there in the portfolio, but it's going to take time. I was trying to work out how would I work out what your cash flow looked like, and I think it's a tough one for me, because I think when it comes, it's really going to pop, but I need the company to give me some clues as to when that inflection point is.
Yeah, so we're right on the steps of it. And so people coming in to become shareholders today have the benefit of 17 years of building this portfolio. And we have a number of royalties that are ramping up or coming into production within the next few years, plus strategic investments that will be yielding dividends over the course of the next few years and be a cash cow by 2023. People are starting to understand that and realize the discount that we are trading to that incipient cash flow.
Okay, so we talked a little bit about royalty generation. Can we just talk about the royalty acquisition side of things? Because you seem very entrepreneurial in mind. One, you don't hang around mining for 17 years in one project. That's unusual, okay? But you've taken the option of using your cash in different ways. So you've got I've forgotten the name of the environmental remediation company that you've acquired recently, for instance. Right. Okay. So, tell me a little bit about the thinking, because it is, again, slightly outside the box.
So we love to think laterally, and it all comes back to this concept of the value proposition for the shareholders. And there's some great examples in the history of the company. We were the first company into Serbia after the Balkan Wars, helped the Serbian government rewrite their money law, rewrite their concession law, became the first company to be granted an exploration license in that country in multiple decades. Now there's the largest copper and gold development story on the planet in full swing, and we have a royalty on it. And you've mentioned a couple of times about the interplay between organic growth through royalty generation and acquisition, and those two married together are really powerful. So you alluded to the long time that it takes for royalty generation to start to have substantial cash flow. We call it the get rich slow plan. It is very astute allocation of capital, and long term we're building a portfolio less expensively than almost anybody in the business, or I think than anybody in the business. But if we can augment that and leapfrog that process towards cash flow by buying the right royalties, that's a great marriage. And we're very careful about the ones that we're going to buy. And there's some key royalties within the portfolio that we have purchased, such as the Leeville royalty that, Newmont and Barrick have in their joint venture that's paying us every month. It's paid $13 million since we've owned it, just as one example.
Okay, so help me understand some of the terminology here. And I think for the people watching this as well, okay, my view would be that people don't give away royalties. You never sell royalties. So under what conditions do... Yeah, exactly, right? So I wonder, what conditions do people sell royalties? Why are you picking them up?
So the package we bought that was announced yesterday, we bought 60 mineral property positions, giving us a really strong presence in Ontario and Quebec, which we're very pleased to be in the Superior province now in a big way. And that gentleman was a quality prospect generator, a private prospect generation shop. And he just reached the age where he said it's time to sell. And he was delighted to do business with us and vice versa. And we're very, very pleased to have Perry English's portfolio now within our portfolio. That ratchets the total number of mineral property positions we have in the world to over 200. And so we're pleased with that acquisition. So, there's various reasons for selling. Another one is, people need capital to do other things. And so, royalties are not their core business. They've acquired royalties perhaps over time because they've sold some exploration assets and kept a royalty, but their main focus is on production or on development of a certain story. And they need to sell some royalties to get the cash flow to be able to put the drill steel in the ground. So during times of tough capital markets, those will come available.
Okay, so talk to me about the team. You talked about economic geologists, okay, so which is great. I would like to get a sense of, what value have they created before? Why have you selected them to be on the team, other than you've known them for a long time? And who are the guys that are looking at these royalty agreements that you're picking up? How do you know they're good?
You're speaking to the most important resource that we have in the company, and that's our intellect. And these are folks with what I call juice. Particularly on the generation side, because it takes a unique person that's walking over the next hill that no one's walked over before, with a view set of understanding a geological feature that people haven't really put into context previously, and thus develop a new discovery opportunity, and then ultimately convert that into a royalty, because we acquire the mineral rights and we build the model and then we market that to the industry and get it done. And we've been refining how we do this process over time. So, these are guys with master's degrees and PhDs in geology and in economic geology, with track records of working for major and junior companies. And then to augment the geologists, it's not all geologists. We have engineers, metallurgists, finance people, legal people that are all part of the team. And it's great being here in Denver, Colorado. Because there's major mining companies such as Newmont here. And a lot of folks take early retirement in their mid-50s or upper 50s, but they're still really sharp and have fantastic experiences that they can share. And we can hire them as consultants and have them on our team. So we have some of the best people in the mining business, in my opinion, available to us on a consultancy rate to be able to help evaluate everything from grassroots to producing mines.
Is that why your G&A is quite high? I mean, you're looking at about 1.2 million on a quarterly basis.
Yeah.
Because you got all this resource, and you're saying you're investing now for the future? Is that the line?
That's exactly correct. So, really smart people, you have to pay them well. And this is all about using that intellect to grow a royalty portfolio. And that's what we've been doing for years.
Okay.
So that you're exactly right. That from a dollar and cent standpoint, come back to the balance sheet and you say, you guys have a lot of salary. That's because we have a lot of smart people, and that's how we've been able to generate these royalties over time.
Okay. You've also sitting on a lot of cash for a long time, right? You're sitting on, it says 66 plus access to another 5, I think was the sort of number. So it's a lot of cash. How long have you had that?
So a couple of different times in the company now, we've had some big liquidity events that have cashed up our treasury. More than once, I've had more money in the bank than all the money we've raised in the history of the company. So we'll deploy money into strategic investments based upon our business acumen and geological interpretation. And then we have a liquidity event, boom, a lot of money comes back. And we've done that a couple of times. We're in that position today. The bulk of the monies we have in the bank today came to us thanks to a liquidity event that occurred in late 2018, where we sold a substantial share position that we had in a big, huge copper gold discovery that occurred in far southeastern Russia. That was a great transaction, cashed us out, put $69 million in the bank for EMX shareholders. And we have other strategic investments ongoing. I'm very pleased with the strategic investment that we have in Rawhide right now, and that was made. And we're value guys, so we're not just taking that $69 million and going out and buying the next package of royalties that we see for sale. We're looking for ways to allocate that capital astutely. And whether it's a small investment in Encero that comes with a strategic alliance, that's a great way to go. Or if it's buying Perry English portfolio, that was definitely accretive, et cetera, et cetera. And we'll deploy those monies when we believe it's distinctly accretive.
Okay, that's fair enough. Do you dish out dividends?
Not yet. So we've had a lot of discussion around this, and we've had a lot of discussion with our major shareholders, particularly after the big liquidity event that we had at 18. And our plan, to boil it down for you, our plan is to institute a quarterly dividend after we have strong, recurring, positive cash flow, not just from strategic investing gains, but from our royalty portfolio.
Okay, so given that you've got $70 million in the bank, I mean, that suggests that gives us a clue about what the market's valuing the company at, really, minus cash. Where do you think most of that value lies? Because you mentioned a couple of big assets or big projects there, but the rest isn't being valued at the moment. So again, give me that sense of how do people value the rest of the portfolio, the rest of these investments that you've made.
Yes, and the market is starting to awaken to the depth of the portfolio and the inherent intrinsic value. But I'll go straight to the company making asset in the portfolio, Matthew, because you're asking about what are the value drivers, right? Other than cash. And let's go straight to the Cukaru-Peki royalty, also known as the Timok project. That was a project that we prospect generated. We then sold our assets in Serbia to Reservoir Capital. Reservoir Capital went on to acquire additional mineral rights in the district. We were actually able to acquire royalties on those other properties very, very, very inexpensively for 200,000 Canadian dollars at the time. And they went on to make the largest copper and gold discovery in the history of Europe. Now, one of the most important copper gold development stories in the world. It is now being advanced by Xinjiang. Reservoir sold it to Nefsa. Nefsa sold it to Xinjiang. Xinjiang just signed a memorandum of understanding about a year ago with the Serbian government to invest 474 million USD into the ground to put the upper zone into production. The upper zone is very high grade. Lower zone is huge, over 1.7 billion tons at 0.86% copper and 0.18 grams per ton gold, and growing. There's a dozen drill rigs turning on site there now, and continuing to expand that resource. And we're sitting here with the 0.5% royalty over that. If you do the math with respect to the incipient value of all of that metal in the ground and our 0.5% royalty, which comes right off the top line, that is a big number, and that is the company making asset in our portfolio. But it's not the only one. That's just the first one.
Okay, but talk to me about revenue last year versus this year, for instance. What's happened there?
Yeah, so the Leeville mine has had some production problems that has impacted our short-term revenue. Akarja has had some permitting problems that has impacted our short-term revenue, and both of those are being fixed. And Barrick has announced substantial new discovery within our footprint of the royalty at Leeville. And so it's only a matter of time that gold's in the ground. It's only a matter of time before that gold comes out of the ground. And we see that if it delays in time before we get the gold and the price of gold's higher when we get it, that's not to our disadvantage long term. The drill permitting at Akarja will definitely get fixed, and they'll be able to further advance and resume their plus $1 million payment. I guess it would be about $1.8 million payment per annum to us once that's completed.
Okay, and COVID-19 affected revenues, or in fact affected costs. I mean, probably reduced costs, has it?
Not affected revenues, but it has affected the business in that it has slowed what is a strong appetite for copper and other base metals, and it has greatly augmented and enhanced because the price of precious metal, specifically gold, has done very well. So we see very strong interest in our gold projects. So we've tweaked, how we're marketing our portfolio to our customers, major mining companies and incipient junior companies, towards the appetite that exists today.
Yeah, again, that entrepreneurial spirit, I guess. One question sent in by a viewer, possibly a shareholder, I don't know, said, were you ever tempted to invest any of your cash in gold bullion?
So we believe it's vastly more astute for us to acquire gold projects and convert these geologic ideas around where there's more gold to be found than to buy bullion.
Yeah, okay.
We get more leverage. We get more leverage doing that.
Yeah. Okay. So can I just come back to this geography component, because you talk in your presentation about focusing a little bit more on Scandinavia, which I think is seeing a little bit of an uptick at the moment in terms of interest. Why is that?
So Scandinavia is a great place to invest in the mining business. There are 17 major operating mines and 7 smelters in Scandinavia. The permitting timeline that we have in Sweden, for example, it can take between 2 weeks and 2 months to get a drill permit. That's amongst the fastest permitting in the world. And the mining laws there are very straightforward, easy to understand, and easy to follow. And the value that mining creates is well respected in that part of the world. We find it to be a fantastic place to invest. And a lot of our customers are awakening to this fact. And thus we have excellent deal flow from our portfolio there. We're one of the largest mineral rights holder in Scandinavia.
Okay, here's my problem. We've talked to a lot of royalty companies recently. You're all the same, aren't you? Why am I investing in you as part of my portfolio versus all the rest?
We're definitely not the same as the others. I don't think there's anyone out there. Altius has a similar business model to EMX, but they are not in the precious metal space. And so EMX is definitely unique in the royalty business with respect to that 3-pronged approach: royalty generation, royalty acquisition, and strategic investing. That's not the way most folks pursue this business.
Do you think you get marked down for that because people think you're not quite sure what you are? Because if you look at the big boys, they're all precious metals, aren't they? So,
well, no, there's some big diversified royalty houses out there. Yeah, Anglo Pacific, which is in your hometown, as well as an example.
Well, but, I think they would argue two things: that they want to get out of the diversified route and they want to be listed in North America. They're looking at you enviously.
That's interesting. That comes back to this concept about doing what you think the market wants you to do, as opposed to doing what you know is the right thing to do long term. And we see value in being exposed to battery metals. We think nickel's a good commodity to be exposed to long term. We think that global copper demand will augment substantially over the course of the next 2 decades. We think it's fantastic to own more copper mineral rights. And we always love gold. And there's great synergies with respect to our geologic talent to be able to do that. It would be silly for us not to be diversified.
Okay. 2020, been pretty tough so far. Not the best start to the year. You guys have popped back up again, which is great. What's the rest of the year? We're
setting new highs every day. Yeah.
You are. I think people are starting to take notice for sure. But I guess what they're looking to you to give guidance to is, how does this trend continue? Because you've kind of like got what did you describe it earlier? A long, slow burn. You've kind of got get rich slow scheme, which is, what should they be buying into? The weight of all of the projects that you've got coming up through, is that what they're buying into? Or is it your ability to do something with this 70 million of cash?
So it's 3 things. It's the existing portfolio, which remains undervalued, and its incipient cash flow. 1. 2, it is what we can do by deploying our cash that we have in the bank astutely to augment the existing portfolio. And 3, it is a team that has been refining this business model for 17 years, and we keep getting better at how we execute it, and the incipient value of the creation that team will do.
Okay. Any big news coming up? What should we be looking for?
More deal flow. We've had great deal flow in good markets and bad markets for a long time now. That will continue. You'll see royalty acquisitions and royalty generation continuing.
And what's your view on the economic outlook globally, not just your company?
Governments are printing a lot of money. And when governments print a lot of money, that's good for precious metals. And long-term, that devalues currencies, which is good for the U.S. dollar priced value of base metals as well. And the world will survive this pandemic, and we will see a resumption of strong growth across the globe, in my opinion, albeit with probably reduced value fiat currencies because of the money printing that will have occurred in order to get us through that.
Okay. So news for your shareholders and anyone looking at you, it's business as usual, growth coming, inflection point coming, undervalued, as always. Watch this space.
Yeah, buy the dips.
Buy the dips.
Yeah, I'll throw in, you can see my insider trades. I've been buying the stock from the open market, as well as keeping all of my expired options and whatnot for 6-7 years now. That tells you what I think. I bought some stock out of the open market during the COVID dip as one example, and I've been doing that for a while. Yeah, so feel free to follow those trades, cdi.com.
Okay, David, thank you very much. Lovely introduction to the story. Stay in touch. Let us know how things are getting on. A big year ahead of you. Let's see if you can keep it going.
Matthew, thank you very much. Very good interview. I thought you asked excellent questions.